Welcome back. Up now, we have Forum Daily's weekly energy update with Dan McTeague, Senior Petroleum Analyst at GasWizard.ca.
Well, thank you very much for that, Nima. This is going to be a very exciting and very interesting week on the energy markets. Let's start with that because you're going to see a significant decision in terms of this tug of war we've seen that have driven energy prices down, particularly gasoline, to a lesser extent diesel, at a time in which there is still significant evidence of supply constraints. I think the COVID excuse in China and lockdowns is starting to dissipate. But we're now looking at two emerging issues that could see prices move up rather dramatically this time next week. And that would, of course, affect all of us across Canada. The first will be Europe's decision and the G7 to try to go after some kind of a cap on Russian oil at $60 a barrel. If they're going to formalize that on Monday, the interesting part is that Russia's already making money at $52 a barrel. So this may not have the effect that's intended. The second piece of information that has come out is the Biden administration has finally realized and is perhaps panicking over the fact that they now have to refill that strategic petroleum reserve, some 300 million barrels of oil that need to be replenished as per law in order to meet that objective that they've been draining over the past 6 or 7 months. That's likely to be very, very bullish for oil futures. They're going to have to buy it from somewhere. That will only drive up the price of oil. And no, Venezuela will not be able to supply that kind of oil in that short period of time. Interesting that we have a Biden administration, again, Democrats, very much like the Liberals here in Canada, refusing, slapping every Canadian in the face by killing the Keystone XL pipeline, which would have prevented them from having to use the Strategic Petroleum Reserve, which would have given them 1 million barrels a day that they desperately need, especially heavy oil, which makes diesel. Instead, they have to go on bended knee, first to Iran, then to Saudi Arabia, and now Venezuela. It's actually pathetic, but I'll leave that for the political pundits to try to get their minds around that. The other problem, of course, is watching this is OPEC. That's going to be meeting. They're holding off their meeting, which is supposed to be on Sunday and Monday. They're going to wait to see if Europeans are foolish enough to go with this cap on oil, because at the end of the day, it seems to be that they will probably drop production, not just the 2 million barrels that they've already announced, but they're probably another estimate of 500,000 to perhaps as much as 1 million barrels. That should really smarten up energy traders who've been playing this dumbing down energy price game and strategy for quite some time, the so-called shorts. They're about to find out what it's like to get burnt by, or in this case, being hoisted on your own firecracker, or as they say in French, votre pétard. Gasoline prices across Canada are at their lowest that we've seen since January. So if you're in British Columbia, you're seeing $1.60, $1.70 for a liter gasoline. Vancouver, as low as $1.62 to $1.65. Those are prices we haven't seen certainly since last year. For Alberta, the 129 to 139 range, and it's likely to stay there throughout much of the week. Saskatchewan, $1.50, $1.55 to $1.60, as well as Manitoba, and Ontario, of course, staying in the $1.40 to $1.42 to $1.48 band range, if you will. Quebec, same thing. It follows the same market. So $1.61 to $1.68, while the Maritimes have seen a pretty significant drop. That is to say, New Brunswick, Nova Scotia, and to a lesser extent, PEI. Unfortunately for Newfoundland, held by a very bizarre regulatory system, they're still paying in the $2.60 a liter rate. They're still paying. I wish it was $2.60. I think for many people that would be the end of it. They're still in that province paying much higher than the rest of the country. And of course, much of that, it doesn't yet include the carbon taxes, which the federal Liberals are going to impose on much of Atlantic Canada to join the other provinces. That, of course, will mean going with a one fell swoop increase of about 15 cents a liter come July 1st, all the way up to 38 cents a liter plus HST at 15%. All in all, a quiet week until about Wednesday. And that Wednesday will be a trigger point. And I think we're going to see the week that ends towards Christmas moving back up probably about 10 to 15 cents a liter across the country, and more for diesel. And so fasten your seatbelts, take advantage of these, well, relatively speaking, lower prices, because they're not going to last. Fundamentals are starting to kick in. Those who've been dumbing down and playing the money managers who've been playing this games with derivatives of driving down oil and gasoline prices and using all sorts of excuses have literally run out of excuses. Fundamentals, supply and demand, are going to have to prevail. That means much higher prices as colder weather sets in, not just for North America, but for Europe. Well, that's it for this week, Nima. We'll be talking to you next week.
All right, thanks for that, Dan. Again, that was Dan McTeague, Senior Petroleum Analyst at GasWizard.ca. All right, stay tuned. Forum Daily will be right back with a look at the latest big moves in the world of cryptocurrencies and digital assets. Catherine Murray will join us next, so stay tuned. We'll be right back after a short break.